This is the MTPredictor weekly update, and this is a big update this week because of the fact, as if you've been following the blogs and the emails I've been sending out. Now on Friday we did have a confirmed Hindenburg Omen, so we are on not only on Hindenburg Omen watch, we've got a confirmed one now, and history tells us that we have not had a market crash that hasn't been preceded by a Hindenburg Omen. It doesn't mean that the market is going to crash. You know, we've gotten confirmed Hindenburg Omen signals where the market hasn't crashed, but we have never had a crash without being first preceded by the omen. So we take note, and it basically tells us the market is unhealthy in here, is what it comes down to. There's a unhealthy divergence going on, and that needs to be taken note. If you have assets, you know, in 401ks and mutual funds and pensions, these type of things that are only geared to make money when the market goes up, well, during the next 4 months, the market is on watch here, and we could see there's about a 77% chance that we'll see a 5% or better correction, all the way down to about a 30% chance of a full-blown market crash. In fact, I'll go back here. This is the weekly chart of the YM. If we go back here, this was the week of October in 2007, and we had our Hindenburg Omen signal there, and again we had one in 2008, and you can see the results. We had a huge sell-off all the way down to our bottom, which the MTPredictor software here called the bottom with this automatic decision point trade here. In fact, I can put the analysis on that just so you can see what it looks like. And that was the target, the initial target on that particular trade. Now the interesting thing that we had, if I put the advanced chart analysis on this DP, you see prior to that we had 5 wave pattern, down to 1 here, up to 2, down to 3, up to 4, down to 5, which correlated with our decision point, which our decision point tells us that it's a potential end of the trend. That, coupled with the fact that the wave count was telling us also that it was potentially the end of a trend. We had our minimum wave 5 support here and our typical wave 5 support area here, and so we weren't able to take that area out. So it kind of ended in between those two support areas, and in fact we can project a little decision point support off this wave 3 low here, and all in this kind of area we saw the support coming in. The DP signal was given there, and then the interesting thing, back of April we had a opposite DP here calling potential end of trend at this point. And so if I take this count off, and let's look at and see what we have on the move up to this DP. Well, in fact, as we had that 5 wave count coming down, ending with a DP, now we've got the 5 wave count up 1, down to 2, up to 3, down to 4, up to 5 here, into the minimum wave 5 resistance area here. Could also project the DP decision point off the wave 3 high here. And you see all in this area we've got this resistance. And then if I want to find any wave pattern that's currently on the chart, I'm just going to click last on chart here, and it tells me we've got a wave 2 or B here. So after this wave 5, typically we get this ABC pattern happening. Well, here's our A up to B. We can project where the wave C may come in using the MTPredictor Elliott wave tools here. I'm just going to look for down wave C. So let's see where that comes in here. Okay, so it projects our minimum wave C support down here and our typical wave C support down here. It's close to that 9,000 9100 area. So so we saw the after that prior omen, the 5-wave pattern down. Now we've got the 5-wave pattern up that may be complete. We've got a Hindenburg Omen that's been confirmed. And typically the targets on the Hindenburg Omen, if the Dow closed Friday at 10,213, so a 5% correction would be down at 9703. And that would put the market right in here, just above the minimum wave C area here, right about 9,700. The 10% correction would be down to 9191 on the Dow, again right in the area of the typical wave C support area. And then finally, some people consider 15% a crash, some will look at 20%. 15% would take us down to I think it's 86.81, and then the 20% would put us down about 81.70. That's going to be right in this area here. So if we get a full-blown crash, and this doesn't look like much here on the weekly chart, but you can see point-wise, if we're going from 10,200 area down to 81.70, it's a pretty significant drop, and would coincide with some of the support that we found here back in the Wave 2 support on the weekly chart. So again, take precautions. If you've got assets that are in 401ks or pensions and mutual funds that are geared to make money only when the market goes up, it's possible. I think there's only about a 1 in 13 chance at this point over the next 4 months that the market will actually rise. So the weight is going to be towards the downside, and this signal can kick in on Monday. It can be as long as 4 months before we get any activity as far as the correction or crash goes. But just numbers to keep in mind. Just want to protect yourself if you have to move in cash, or consult with your financial advisor on how to take precautions just in case. Like I said, the probability of the market crashing on any given day is about 1/10 of 1%. And with the omen out there, it actually goes to 30%. So it's a pretty significant increase in odds. So just pay attention, and we'll keep our eyes open and continue to monitor this. Anyway, I hope that helps, and we'll take a look and see what things look like next week.